Hi, in this video I'm going to talk to you about mortgage hosts. What are they? Who are they? Who would use them? What are things that you need to be aware of? What are the downsides? What are the upsides? And what do people sometimes achieve with them? So first of all, let's talk about who would use a mortgage host and who wouldn't use a mortgage host. The principle of a mortgage host is that somebody else takes the mortgage out in their name on an investment property that you're buying. Okay? So in its very simplest term, I find somebody to take a mortgage out in their name to buy a house, but they're buying it on my behalf. Okay? Now, who would use a mortgage host? Well, somebody who wasn't 18 yet, who was investing in property, would need to use a mortgage host because if you're not 18, you can't get a mortgage. Somebody who's got credit issues. In the buy-to-let sector right now, if you've got county court judgments or you've got defaults in the last 3 years, you're going to really, really struggle, probably not be able to get a buy-to-let mortgage. So somebody with credit issues, now those credit issues drop off 6 years after the date they incurred. And if you're not sure, speak to a mortgage broker, because if you're at 5 years, 11 months, you may as well wait the month and they drop off. But if you're at 1 month, mortgage host can be an outstanding way of you still being able to invest. Instead of saying, I've got credit problems, I can't invest, and you have to stop there. I've lost track of the number of people I've met that have got a good lump of money, but have had some credit problems, and because of that, they don't invest in property, but they absolutely could with the right mortgage host. You wouldn't use a mortgage host if you can get a mortgage in your own name. You wouldn't need to do that. So then this video is not for you, and this strategy is not for you. Now, if you take a mortgage host, so let's assume I was going to use my sister to buy a property on my behalf, and she's going to put the mortgage in her name. To have the mortgage in her name, she needs to have the property title also in her name. So her name goes on the land registry, she owns the property, and the mortgage is in her name. You can't have the mortgage on a property separate and different to the title. It has to be the same. So what that means is you're now in a position where, in my example, my sister, if I've put a deposit down and the property gets equity, it grows in value, all of that is in her name, not my name. Now, we can have a written agreement, an official agreement between me and her that says that equity belongs to me and that any growth belongs to me. And that can be a legal document. We can do that officially. Okay? And that can be a legal document. And a legal document, by the way, doesn't have to have been done at the solicitors, but I strongly recommend it is because you want to do this properly. But if you have that agreement in place, then if she ever sells it or the property goes up in value, she has to pay you that money back. However, unless my legal document is also registered at land registry, which is complicated, costs money, and sometimes the mortgage lender doesn't like you registering that charge there as well, then if that isn't registered, and I fall out with my sister and she sells the house behind my back and runs off with the money, by the time I realise and I sue her for it, it might have all gone. So you should only really mortgage host with somebody that you totally trust, that you're totally happy to be aligned with, that you know won't let you down. So for some of you, unfortunately, that will rule, don't want to have financial connections in that way with people, that will rule this strategy out for you. But some people go, you know what, I can do this with my sister, no problem at all. I can do this with my brother or my close friend, no problem at all. And that's the main downside. If I was talking to you about downsides of a mortgage host situation, it's that they are owning that property. It's your investment, your deposit gone in there, your growth, but they are owning that property officially according to law. Now, my suggestion is you mortgage host for as long as you need to, and then you move the property back to your name. So a couple of other things to be aware of. So if my sister's bought the property and the property goes up in value a lot before I can move it back into my name, when she moves it back to my name, she is selling it, I'm buying it. So first of all, there's the costs of that sale and that purchase. Secondly, there could be stamp duty for me to pay because I'm now buying it. So the stamp duty gets paid twice. Thirdly, we're now in a situation where if it's gone up enough, she's made a capital gain and the government will want to tax her capital gains tax and she's not going to want to pay that. So you're going to end up paying that as well. Whereas if you just owned it all along, you'd never be selling it, so you'd never have that tax to pay. So if it's just for a couple of years and that's not likely to be an issue, then it's the stamp duty and the buying and selling costs. Okay? Another way that people do that, though, is you may choose to mortgage host permanently with, in that example, my sister, and I'll come back to that shortly. But they're really the downsides. There's a financial cost to this. But if there's that financial cost on one hand, and then there's the cost of never being able to invest in property for a few years, I know which I'd rather have. I know it's more complicated. I know there's more of a cost there, but I'm still in the game. I'm still investing in property. The upsides are you get to own this property in effect. Yeah, it's owned in someone else's name temporarily, but you own a property and you get on with your journey that you couldn't get on with. I know a 17-year-old, 17, so not able to get mortgage finance yet, who has £1 million portfolio and is financially free from the income it generates. And they've used mortgage hosts to host each of those mortgages on their journey. So if a 17-year-old can do it and make it work, you can do it and make it work. Okay. So how do you pay the mortgage host? Well, there's a couple of ways to think about that, because they're risking their credit, remember. They're risking their credit, because if you don't pay the mortgage, it affects their credit. If you take the rent and spend it and don't pay the mortgage, it affects their credit. Now, it's not that big a risk for them because they've got all that equity. If you start not paying them, they can sell up and take the money. But then you're in dispute. That's not where they want to be. So there's two ways really to pay them. Some people say, look, will you be my mortgage host? I'll give you 25% of the property. So I'm going to put the money in. You're going to be the mortgage host. I'll manage it, or we'll manage it jointly. And therefore you get a share of the profits. And that could be 25, 50, 75. It's whatever you want to give away, whatever you agree makes it a win-win. Okay? Another way of doing it is saying, look, if you'll be mortgage host for me for the next up to 5 years, I'll give you a one-off payment at the end of £3,000 or £1,000 or £5,000. So they're the two main ways that you would financially reward the mortgage host for helping you. Of course, some people will do it for free for you, but they are going to have to sign for a mortgage. They are going to have to go to the solicitors and sign the paperwork there. The key is to be robust in your thinking. If you and your sister, you and a best friend, you and somebody else you know are getting into this together, and you're committing to doing this together, you need to go through the upsides and agree how the money will be shared, but also go through the downsides. What happens if a tenant doesn't pay? What happens if there isn't enough money to pay the mortgage because you also have a tenant not paying and you have an accident and can't work? To go worst case with these scenarios, blow it up, blow the situation up. What happens if they go bankrupt elsewhere in their life? Because that's another risk. They go bankrupt elsewhere in their life because this is an asset they own. They'll come after that as well. You know, you need to go through all the what ifs, document them all, just make it clear. Just can be on a piece of A4, but make it clear what your agreement is. Here's our agreement in general, but here's our agreement with the what ifs. It's what you do with joint ventures as well, by the way. Here's our agreement in general, here's the agreement with all the what ifs. So we've made the agreement now. We don't intend for any of the what ifs to have, but we've already planned for them. So to finish off, mortgage host is not an ideal situation. However, it can be an awesome way if you can't get credit for some reason, whether that's a financial reason, whether that's an age reason, you know, whatever the reason may be, whether you're living abroad and you need someone in the UK to do this for you. If you can't get credit for some reason, this can be an awesome way to get into a deal where otherwise you wouldn't have been able to do it. I've seen it really successfully used, but it's niche. It's especially for those people that I mentioned earlier on. I really hope you found this video useful. Remember, invest with knowledge, invest with confidence, create financial freedom. I'll speak to you soon. Thank you. Hi guys, it's Aran here. Did you enjoy this week's video? If so, there are 3 things you can do to continue your property investing journey. The first is you can click here and subscribe to my YouTube channel. I really hope you do, because then each week I can keep sending you great educational videos just like this one, so you can keep developing your property knowledge. Secondly, you can click the link here and get a free copy of my book, The Property Coach, where I teach the 9 steps to really truly successfully building a property portfolio. The third thing you can do is click here and go to my website, www.arancurry.co.uk, and there you can subscribe for free to my newsletter. And what that means is you'll get loads of free educational content in lots of different forms, and also any of our promotions or offers that we run are also there on the website and also in those e-newsletters. Again, helping you move forward with your property investing journey. So if you want to take action, just click any of these 3 boxes or all 3 and move forward to the next level. And in the meantime, invest with knowledge, invest with confidence, create financial freedom. Thank you.